Hi everybody, and welcome to this lecture on IFRS 17. So the way I'm thinking is that you've already got kind of a basic understanding of Solvency II regulations that affect insurance companies. That's used for telling the regulator how much money we've got in order to protect policyholders. Well, IFRS 17 is different. It's an accounting standard. So it's about presenting to the regulator, but also shareholders, the general public, what a company's balance sheet is, but also what their profit and loss account is. And so the reason for it existing is slightly different, or what it's trying to communicate to various stakeholders is slightly different. Is trying to communicate true financials so that various stakeholders can make sensible decisions about the company. And that means that although some of the terms in IFRS 17 look similar to Solvency II, they might actually be a little bit different. So I've got kind of 3 lectures to kind of go through and introduce this. This is lecture 1. We'll split it into a few videos. And the areas that I'm going to go through are start off with IFRS 17 versus Solvency II, just kind of what the high-level differences are. Then look at the IFRS 17 balance sheet. And then that balance sheet is made up of various things, which we'll look into a little bit more detail. One is a component called the best estimate liability, or liabilities. The other one is something called the risk adjustment, and then a third one, something called the contractual service margin. I'll then have a little section that I call in future years, and then I'll summarise. So in this first video, probably go through the first 3 things. We'll just see how we go. Okay, let's kick off. So this is IFRS 17 versus Solvency II, or S2 in brackets there. Okay, let's give ourselves a little bit more space. So what does Solvency II do? Solvency II works out the market value of assets minus the market value of liabilities minus the solvency capital requirement. So hopefully you remember these kinds of terms from your from what you know about Solvency II. And this is a balance sheet. So hopefully this is positive, and it tells you how much money a company's got left over out of their assets once you subtract off their liabilities and subtract off this thing called the solvency capital requirement, which is kind of an extra safety margin. You may remember that this market value of liabilities can be broken up into 2 parts, one called the best estimate liabilities and one called the risk margin. But I won't get into that just now. So yes, it works out this thing for the regulator. And this makes sure policyholders are protected. IFRS 17 is a bit different. So IFRS 17 are rules for working out accounts for insurance companies. This gives, put in a colon, a balance sheet and a profit and loss account. So it's doing a balance sheet that's similar to this thing up here, but there's also an extra component. It also has this profit and loss account section. Okay, so that's that first one done. IFRS 17 balance sheet next. So IFRS 17 balance sheet. Okay, so this is, let's draw one of these rectangle type diagrams. So this first rectangle on the left hand side here is market value of assets. So that's very similar to Solvency II. What I'm going to draw on this other side is a little bit different. I'm going to split it into three sections. So this kind of break at the top, this is like our free assets, just like in Solvency II. At the bottom, you get something called BEL, which is your best estimate liabilities. So sounds similar to Solvency II, but is actually slightly different. Then we get something called RA. So this is the risk adjustment. So sounds a bit like risk margin in Solvency II, but is different. And then this thing called CSM at the top here. So this is contractual service margin. And these two concepts at the top here are definitely new ones for us. Just so you know, like if you go through some of this IFRS 17 literature, you'll see that these two things at the bottom are sometimes together given a name, and they're called fulfillment cash flows. So just like with all regulations, there's lots of kind of new jargon to learn. Okay, so this is what the balance sheet looks like. So our free assets are slightly different to Solvency II. I'll just write that out in letters so it's really clear. Let's put a free assets at the top here. So free assets is equal to market value of assets minus the BEL minus the RA minus the CSM. This looks a bit like the Solvency II balance sheet, comma, but it is different. So that means that the Solvency II free assets are not the same as the IFRS 17 free assets. So that's a kind of first kind of most important conclusion. This bit here is going to be different between Solvency II and IFRS 17. Okay, let's take a break there and come back in the next video.